Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisor and your host for Upticks. Today is our 60-second episode, Prepping for a Market Crash. Okay, Jesse, we brought you back on the show because we just finished up our third quarter, and the title of today's show is Prepping for a Market Crash. I didn't want to scare our audience, but hopefully I alerted them enough to click on the link. Last fourth quarter of 2018, the market imploded down 19%. And so I've had a lot of questions from clients lately. What if that happens again? I know the media has been pounding the table that we're headed into a recession potentially. We've had a lot of volatility here lately. So what I wanted to do today is I wanted to talk about what actually happened in the third quarter, and then probably more importantly, what are our expectations as we finish out 2019.
Right, so in the third quarter, we were kind of trading within a range. So there were a lot of days where we were down 700 points, and then there were days where we were up 600 points. And we didn't really go anywhere. So everyone was kind of just on the edge, kind of waiting for something to happen with the Fed or with China. So it's kind of funny because I was talking to Corey the other day, and I started a year ago on October 1st.
Happy anniversary.
Thank you. And the headlines when I started were basically the same as they are now. It's all about China, the trade deal, and what the Fed's going to do with interest rates. Only it's kind of flipped from last year, where last year it was how much are the Fed going to raise interest rates, and now it's how much are the Fed going to lower interest rates.
Very interesting. So, the media will find what it can and then keep bubbling it up to the surface. So where are we at year to date? I know the S&P's had a pretty good year so far. Do you know ballpark of what as of the recording of this show? I know it's probably going to change obviously as it does every day, but where are we at?
About 16.75 for the year.
So up almost 17%, and on historically the S&P average is around 9, right? Mm-hmm. So we're still having a heck of a year, even though the media certainly hasn't made it felt that way here lately.
That's kind of the interesting thing about this rally and this year is that it's been such a good year in the market, but if you were just to turn on the TV, it would make it seem like it's been a bad year, but it's actually been a really good year, even on historical standards.
Yeah, absolutely. So for most of our clients, we're exceeding our expectations as far as their target return. But you mentioned the Fed. So the Fed here lately has lowered interest rates 2 times now. Can you comment on maybe why they're doing that and what potential implications that may or may not have?
So basically what the Fed's mandate is jobs and inflation, and they're looking at economic data. So the one thing that a lot of people are focusing on in the market right now as far as economic data goes is manufacturing data. So there's been a couple surveys, the ISM and the PMI, that have both come out that are showing manufacturing in a recession because it's in contraction for 2 straight quarters now. So
So interesting. So we're not in a recession, but you could argue that manufacturing is in a recession.
Yeah, just that
because it's contracting.
Just that portion of the economy.
Interesting.
What people are worried about is that will spread into other areas of the economy. So manufacturing only makes up about 11% of the total GDP, but that can get into services, and then that can go to the consumer, and consumer makes up about 66% of the GDP. So one good thing that we saw today, as of the recording, is the jobs report came out, and the jobs report is still showing a lot of strength. We're down to 3.5% unemployment rate, which is, by historical standards, that's better than it's been in 50 years.
Yeah, frankly, that's what I was about to say. I don't remember it being as low as 3.5%. A healthy economy is considered 5, right? Yeah. So that means that people that are running jobs or looking for jobs are certainly employed at this rate.
The labor market's so tight, and it's harder for employers to find people who are qualified or want to work for them because there's not a lot of people out there looking for jobs right now.
Yeah, it's interesting. I had lunch with one of the recruiters that we help find us good people to work at Falcon Wealth Advisors, and she was commenting on how cocky individuals are right now, and they're just basically they are driving the market versus the employers. So it's really interesting how that pendulum has certainly swung in the last decade.
That's also another thing that could drag down the economy, is that people are looking for people to work. Employers are looking for employees, and they can't find them, so they think growth might contract because there's just not enough supply.
Interesting. Yeah, I never would have thought that, certainly. What about here lately? There's also been a lot of big stir by the Democrats talking about impeaching Donald Trump. I mean, do we think that that's a high probability, and what could that do to the market?
That's an interesting one. I wouldn't go so far as to say it's a high probability. I think it's something to definitely keep an eye on. I think if you look at the transcript, it's kind of how you interpret it is what your opinion would be on whether or not that's an impeachable offense or not. So it's interesting. I think it's something that will potentially go on for a little bit. It's definitely, if impeachment happens, it's not going to be for a long time, and that's not really my expectation right now. But it's going to be a long, drawn-out process.
Well, that's what I thought. I mean, with the election coming up here in almost a year, even if they were going to try to impeach him, they probably don't have enough time to do it.
Yeah, just based on how things move in politics, especially now, it could be a long process that might go into it. One thing that it could do is undermine his campaign. So that's something to potentially look out for. But I don't know if I would go so far as to say as impeachment is a likely thing to happen.
Okay, that makes sense. And then you mentioned China. Where are we with China? When is this deal going to get done?
Who knows? I feel like we've been talking about this for the longest time, and people are probably tired of hearing about it. But It's really just one of the biggest things. It's a huge deal. I mean, the tariffs are a massive deal for a lot of these companies. Farming is taking a big hit because of it, and China's targeting farmers because they know that a lot of them were Trump voters, and they know that he wants to keep that constituency happy. So it's an interesting one. I don't know if there's going to be a resolution that both sides are happy with, and I don't know if that's going to ever happen. So it's interesting.
Perfect. So that's good. So thank you for that. So that's a recap. There's been a lot of news come out here this year. And so the market's up almost 17% as of the recording of this show. What our audience wants to know is what's going to happen in the fourth quarter. And maybe we can comment also on what are we doing to sort of protect or prep for a potential crash. Again, we're not trying to say that we have a crystal ball and we think it's going to crash like last year, but what do you think are some of the potential outcomes, or what are some of the items that you're paying closest attention to here in the next 3 months?
So earnings season is coming up in the next few weeks. That's going to be very important to see how companies really are doing. Banks, especially that first week of earnings season, is going to be really important. And then watching the economic data is something that I'm going to pay very close attention to. See if there's a rebound in manufacturing. See if that manufacturing weakness spreads to other parts of the economy. I think that's going to be important to watch. Average hours worked, because that's really a precursor to layoffs, things like that. So, but as of like yesterday versus today is a completely different outlook in the market for everyone, because we thought we had this weakness with manufacturing that was going to spread, and now we're seeing the jobs report that's saying that's not the case. So it's definitely a sunnier outlook than it was even just yesterday, which is that's how it really can be in the market. So
absolutely. And then the Fed is going to meet later in October. And do we think they're going to lower rates again or leave them unchanged? What's our pulse on that right now?
So that's something that's been bouncing around too. So I haven't looked at the probabilities today, but as of yesterday, it was 90% based on the manufacturing weakness. The day before, though, and the weeks before, it was under 50%. So it jumped up on that manufacturing weakness. So maybe the jobs report has lowered it again a little bit. I haven't checked today, but I would assume that the probability is lower. I would still probably expect them to lower rates in their meeting in October.
Okay, and so then just as a quick recap on that, what that means for you, our clients, or anyone that holds bonds, when the Fed lowers rates, that typically will cause your bond values to go up. And that's one of the reasons why they play an important role in a portfolio, especially for a retiree. And that's one of the ways that we help hedge or protect you in the event of a market pullback, whether it's severe or temporary or whatever. The bonds, when the Fed lowers rates, they typically go up. Now, what about our stock portfolio? Without divulging any of our individual holdings, maybe you can talk a little bit about what we're doing. Again, we're not trying to time the market. We're not going to cash in and just sit on the sidelines, because nobody can predict the future, particularly when it comes to the market. And so what have you been doing as far as looking at our individual holdings? Again, without maybe saying names, what are some of the moves that we've been making or shifts?
So I would say we've been tilting the portfolio a little bit more defensive, getting into more defensive sectors like healthcare, utilities, consumer staples, looking at those types of things. I think one thing that's important for us is that we don't shift it too quickly.
Right.
I think we want to shift the portfolio and have that downside protection. But on days like today, where we have, we're up over 0.5%, we want to get the appreciation from those stocks that will benefit from that most.
Yeah.
So we are shifting the portfolio a little bit more defensive, but also keeping in mind that, again, like you say, we don't want to try and time it
Right.
And get too out of whack with what the S&P weights are.
Yep, very good. Yeah, so again, we've got parameters that we stay within. Again, we're not going to sway the portfolio and move the pendulum too far in either direction, but we are, because we pick individual stocks, it does allow us to change the portfolio based on what's going on in the economy. I think that's very important. And another reason that we don't use products at Falcon Wealth Advisors. So again, if you're in a mutual fund, an annuity, or an exchange traded fund, you don't know what that money manager is doing. And they certainly probably don't know who you are and what your individual goals are. And so that's why it's very important to us that we go out there and we invest directly in the stocks. A stock's paying a dividend. We know we're going to collect that dividend, and we know why for our clients. And we just think, especially for a retiree, you need to have that transparency and that control because, let's face it, when you retire, you're typically not saving anymore, right? So this money's got to last you for the next 30 years, and you certainly don't want a money manager that doesn't know who you are managing that money.
Right.
Okay, good. So without a crystal ball, do you think, and again, we won't hold you to this, it's kind of more of a fun question, where do you think the S&P ends the year at? So it's up almost 17%. What do you think's going to, normally October's a bad month. Again, we don't try to time it, but history would say that October is usually bumpy, but a lot of times we get a Santa Claus rally towards the end of the year. So what do you think we're going to end the year at?
Right. So October is historically the worst month, but the fourth quarter is historically the best quarter. So kind of
right.
Opposites there. But I would say that we end kind of where we are now. I don't see a lot of upside. I don't see a lot of downside. I just think that, we're still going to be trading in this range with all these things these overhangs in the economy, like the trade war, some of this manufacturing data, the impeachment potentially, the Fed. All these things are still weighing on the market, and we've been trading in this range for a while now. So I think that may continue. I think we might see a little bit of weakness in October, and then rally to the end of the year back to essentially where we are.
So you don't think volatility is going to end, certainly?
No, I think it's going to be very volatile, but I think
that we'll just kind of coast in as far as the return is concerned.
Right.
Okay. So again, that's a very important point too, is that don't panic, right? Volatility is very much here, and it might be a bumpy ride, but remember your stocks are up, or not yours specifically, but the market's up around 17%. We've had a heck of a year, and so we're going to be paying close attention to that. And if the Fed continues to lower rates, those bonds are there to protect you. So to wrap it back to the title of our show, Prepping for a Crash, we're already prepping for it, where clients are protected, certainly that need income, and we're paying very close attention. But don't be scared. Again, that's why people hire Falcon Wealth Advisors. Jesse's paying very close to the economic indicators, and if we need to make shifts, we're going to do that. And that's part of the reason that we have jobs, and that's what we're here to do.
Right.
Did I miss anything on what's going on out there?
I don't think so.
Okay, perfect. All right, so now to the fun portion of our show. I wanted to do another lightning round with you. So again, this is the Vertebrae lightning round sponsored by Falcon Wealth Advisors. And we've got an abbreviated version. So I've only got 5 questions for you today.
Okay.
All right, I'm going to take it easy on you. So when you're ready, we'll start the clock here and I'll fire away. You ready?
Yeah.
Okay. So baseball season's wrapping up also. So who's going to win the World Series?
Oh, I'm the wrong person to ask that question. I have no idea.
Do you even know? You probably don't even know who's in the playoffs.
I don't even know who's good. I assume the Yankees are good.
I think so.
No, the Astros. I heard the Astros are the best team. I'll go with the Astros.
All right, the Astros. That's who Corey picked, by the way.
Okay, cool. Wow, then he's like the baseball guy.
Yeah, he is a baseball guy.
Okay,
so,
cool.
Okay, the Chiefs, as of the recording of this show, are currently undefeated. What's going to be their record?
They're going to lose to the Patriots. I would say they lose another random game that is like they were expected to win, like the Lions game last week. They were expected to win that game.
Sure.
It was really close.
So what do you think? So they'll lose 2 games?
I'm going to go 3.
3? Okay, 13-3. All right, fall is upon us in Kansas City. What is your favorite season?
That's a good question. I would say it's a tie between fall and spring.
Okay. I probably agree with that. What about when will the next recession be?
Ooh. Within the next 18 months.
Yeah.
12 to 18.
Okay. And then what's the best advice that you've ever received? This can be anything, doesn't have to be financial related.
Oh, that's one I have to think about. I think the last time I said, it was live every day like you want to live it.
That's a good one.
Yeah, I would say that's.
Yeah, appreciate that. Live every day like you want to live it.
Yeah, even if you're not doing what you want to do, just put your best foot forward and live. Even if you're doing something you don't want to do, it's, live like you want to live.
Yep, I like that.
Be positive about whatever you're doing, essentially.
Good.
Yeah.
Good. All right. Well, thank you for playing in the Falcon Wealth Advisors sponsored Bird of Prey lightning round.
Thank you.
Now, one quick thing, because this is new also that we were just talking about this morning, is I know you watched the movie Joker. So without having any spoiler alerts, let's give Jesse's review and maybe what do you rank it out of 1 out of 10?
It was a really good movie. So me and my roommate went to see the movie last night, and I kind of went into the movie knowing it was a little bit dark, and it exceeded all.
Really?
It was very dark, and it's kind of a good commentary on society, though, maybe.
Interesting.
Or social things around mental illness. Like, it was very mental illness focused. So it's not you're not going into a normal superhero movie. It's
Right.
more of a cultural commentary and kind of a character study around this one person. But yeah, it's very dark but very good, and Joaquin Phoenix was incredible in it.
Yeah, he's a good actor.
We were having a hard time deciding out of 10 last night because my roommate asked me the same question, and you come out of the movie so you're almost in a daze because it was kind of such a dark movie and you're maybe not expecting it. So I had a hard time giving it a rating, but I would say like 8.5 out of 10.
Wow.
It was a really good movie. But
Wow.
You have to go in knowing like what you're getting into.
Right.
So
Interesting. Well, good. Well, yeah, the previews look pretty awesome.
Yeah.
So I don't know though if I want to watch something that's depressing. So I don't know
but it's good. It's one of those
Yeah.
movies that it kind of makes you think, but it's just interesting how their take on what a superhero movie or a supervillain movie would look like.
Yeah, it's interesting. Yeah, I'm glad they did it.
Yeah,
They're
great.
finally switching things up a little bit. I feel like too often they just remake the same movies over.
Yeah,
and
it's
over
very
again.
different than any other
Yeah,
movie.
I can appreciate that.
Yeah.
Well, perfect. Well, that's all the time that we have for today. So again, Jesse, thanks for joining me on the show. Of course, if you're watching this on YouTube, we appreciate the thumbs up button. If you think it's worthy, certainly you can subscribe to our channel as well so that you don't miss another show. We're also out there on iTunes or Spotify. So if you do think our podcast is 5-star rating, we would also appreciate that as well. You can find us out there on all the social media platforms. So on Facebook, Twitter, Instagram, and LinkedIn. And my Twitter handle, if you're out there, is Jake Falcon, CRPC. And Jesse, if you want to reach out to Jesse directly, I believe you prefer your email.
Yeah, if you want to email me, it's just Jesse at Falcon Wealth Advisors.
Perfect. Thanks again for tuning in, and we hope you all have a great week.